Morning, everyone. Happy Thursday. Welcome to Money Matters Mastermind. We're going to start with a review of the July financials here, and I'm going to share my screen. We'll go over some of those numbers, and then we have Lisa Ina with us, who is going to take it away, probably who most of you guys are here to hear from, to talk about IRAs, 401ks, annuities, life insurance, and planning for your financial future. All right. Hi, Lisa. Okay, so
good morning, everyone. Thank you for joining and for having me today.
I will pull up some info from our month of July for everyone. So in July, we added 9 new agents and brought our total agent count to 457. So we are making our way into the back half of the 400s here, and that's super exciting. So when you see those posts welcoming new agents from Carrie and Mike, be sure to reach out and get to know the new faces around the office. Before we get started, you're going to see a lot of down numbers, July over July, and then some as well still year to date. For reference, if you haven't heard this on sales meetings yet, our July in 2021 was our best July ever and broke a lot of July records. So we're facing it wasn't likely that with the way the market is starting to shift that we were going to hit those high of numbers again this July. So you're going to see that throughout. And as we spoke a little bit with the ALC yesterday, you're seeing some of this in your own business as well. So it's what the market center is facing. We have some numbers from what the MLS is doing year to date. So we'll share those with you as we get going. Okay, so our contracts written was 373 in July. That was down almost 30% from last July. So that is a somewhat of a leading indicator of how much business was actually being written in the month of July versus what a lot of times we focus on is the closings that we have. So that was significantly down from last July, and that's been trending, down year to date all year. However, that kind of dropped it a little bit further. So that's down 8.5%. With that, we had 185 of our agents writing contracts. That's only 43% of our agent body. And that is also lower than we typically see. Like we are used to around 50 to 52%, I'd say, in any given month. So with the amount of contracts being written down, so was the percentage of agents as well. Listings taken. This one, I know we talk about a lot. We took 226 listings in July. That was down about 19% last year and still down 11% year to date. That is relatively in line with the MLS. They're down just under 11% year to date in listings taken as a whole. So I guess in some ways it's not as though we're super out of the norm with what the market is seeing year over year in listings taken, but just so that you are all still aware, we are down over our own numbers about the same amount as the MLS is year to date. And with that, 85 agents took a listing from our office. That's 20%. That's, around 20% is what we would expect to see. We've had months that were 16, 17, 18%, and that's a little bit lower. For our stats inside of the listings taken number for agents, team agents are not accounted for the way that they are in contracts written. So you might say like 185 agents wrote a contract, but only 85 took a listing. That is skewed heavily by the fact that team agents are not counted in the way that the listings are tracked in our system. All righty. Total GCI, so that's gross commission income. That was down about 6.8% from July of last year and is still trending upward year to date. A couple of these metrics with the way sales volume has increased, especially through the first half of this year, was still pretty, we were seeing those higher prices. That equates to the percentage of your commission is also going to be higher. So year to date, commissions were still up 7%. And in July, they were down about 7%. when we get to closed units and volume also being down in July, that will make sense why the GCI was too. Our company dollar, we were at 254,541 in July. That was down about 14% from last year. And that one is still trending up 3% year to date. We expect that to probably level out in the back half of this year, as we saw record months in the latter half of 2021 for company dollar. And our profit share was 96,610. This was down just under 25% in July. We had 127,000 in profit share last July. So that was the most profitable July ever. And we knew that that was going to be a difficult metric to reach in back-to-back years. We're pretty much even year to date for profit share over 2021, just down 2% through the end of July. And which is really great considering the record months that we had in 2021 last year, that our profit has relatively sustained itself this year thus far. Okay, on to some exciting things. So our title company, for those of you who are on these calls every month, you are used to either seeing a number and then me saying you're going to see this number for the next 3 months in a row. So the way that we spread profit from our title company is they share profit quarterly, and then we divide that by 3 and spread it evenly over the next 3 months. So for July, August, and September, you're going to see this 20,569, and that is the even spread of their Q2 profits. This is up like 160% from their Q1 profits. So that is super exciting for our company, as that's shared, above the line and goes into profit share. And we are looking in Q3 now already, looking at a good another quarter. So that is that number. The America's Preferred Home Warranty was up a little over June, 3766. That is, I think it was 3466 in June. So that's pretty standard what we're seeing there. It's not tons of like heaps and valleys. So you'll see roughly around 3,500 to 4,000 from America's Preferred Home Warranty every month. Our cross-country mortgage MSA is 8,500 monthly, that you're used to seeing. The Greater Metropolitan Management was 14,000 in July. They're up significantly year to date. So we are always happy to be in partnership with them. And there is a new partnership we have that started in July, which is Truehold. Mike wants to unmute and give a little spiel. Nope, he doesn't. Okay.
No, I will. Come on. I'm never going to pass up the opportunity to unmute.
Short.
Yeah. So Truehold is an awesome company that supports our in being able to bring a.
Okay. I got it.
Colleen, please. Thank you. It brings the opportunity for our agents to have an instant offer in their back pocket for clients. So they are an instant offer iBuyer company with twist. They're sale leaseback, so they buy the property and then your clients can stay in that property for 6 months, 12 months, 18 months, 60 months, doesn't matter, in a leaseback program. So they access all of the equity in the property and get to stay in it. If you have anybody who's ever considered new construction as an option, but they're worried about moving 2 or 3 times in the process, this is a great model for them. If you have elderly agents or elderly clients who are looking for opportunities to age in place, but want to access the equity in their property because most people's wealth is tied up in their homes, that's awesome if you're 36 years old. It's not awesome if you're 76 years old. So it's a great way, it's a great unlock for those individuals. And because of our partnership with them, there's an opportunity for us as a market center to earn as we help them grow their business and you help your clients.
Yeah, so with that, we closed 4 deals with Truehold in July, and that equates to the 3,400 you see here that was shared as above the line outside income in the month of July. We expect that to be anywhere from 4 or 5 all the way to 10 per month, depending on the seasonality and buying process that they're experiencing. A well-known transaction coordinator, Elizabeth Kosminski, in our office is working with them as the agent. So she's writing all of their contracts for them, and instead of them having an agent that's receiving a buy-side commission, they are paying us for using Liz and the ability to work as an affiliate partner with Keller Williams Greater Metropolitan. So that's something you're going to start seeing. So this was month 1 and starting off strong with 3,400, and that was for 4 closings in July. Alrighty, and to bring it home, some last data points here. Our closed units was 387 in July. That was down 17% over last year and down just under 4% year to date. The MLS is down almost 11% or a little over 11%, I think, in their total closings. So we're outpacing the market a little bit there, still trending down slightly year over year. And that's similar with our total closed volume. So we had about 100 million, just over 100 million in closed volume in July. And all of that was down over last July. We're still trending up 5% year to date, and the MLS is trending down 5% year to date in their closed volume. So that's another area that we are still outpacing the market, which leads to the final point I like to share. So in July, our average sales price was $263,000. That moves our year to date average to $245,000, making it the highest average sales price this office has ever seen. Our average sales price last year was $224,000 for the year, and that was the highest. So 7 months in, we are higher than that again. So that is great for your comps, going on listing appointments, incorporate that in. For new agents who don't have a ton of sales on their own yet and maybe don't have your own average sales price, we always recommend using your office's statistics to help you gain those listings. And that is a great stat to have in your wheelhouse. Okay, so I'm just going to stop sharing. Does anyone have any specific questions about what our July was like, or are y'all anxiously ready for me to stop talking and pass it over to Lisa?
I just want to remind everyone there's a few reasons that we do this, that we share out our results both month over month, year over year, and year to date. One, we are committed to transparency as an organization. It's the only way that the profit share system really works. And so all of you can access the income statements and balance sheet for our company through mykw.kw.com. And if you go to the reports section, you can see the full income statement for our brokerage every single month. And then the other reason that we do this is to model an activity that I hope you all are doing with your businesses, which is looking at, what did I sell last July? What did I sell this July? What did I sell in the first 7 months of last year? What did I sell in the first 7 months of this year? How's my profitability? Where am I making money? Where am I selling houses? Because your awareness, the awareness that you generate about what's happening with your business will lead to action, right? There's a lot of things that end up as knowledge for the sake of knowledge, but if you see that you have sold 5 fewer homes that year over year, that will lead you to question, well, I wonder, what homes did I sell? What's my average price point? How much volume have I sold? How much money have I made? How have I invested? All of those things are going to direct your business activity. So I want to encourage everybody to do that. If you need help with that, if you need to know how to access reports, if you need to know how to access your closed business year over year, year to date, mykw.kw.com, and then click access my reports. There are loads available for every agent, both for our entire market center and for your individual business. If you need help with that, Julia would love to coach you through it.
I would.
All right. So that, sorry, I just want to say my piece, because I know sometimes it's like, okay, there's a bunch of numbers and they're really big and things are up or down, but the point is to model an activity for you with your business. And you could also take that same activity and use it for analyzing your investments, which is a great segue to Lisa to talk about all of the different investment vehicles you have, all of the different opportunities for protecting and creating wealth for you and your family. So Lisa, thank you so much for being here. I know we've spent a few months trying to get this on the calendar. So glad to have you with us. Really thrilled for you to talk to folks about something that doesn't really darken the door of a real estate agent's portfolio very often. We're very dedicated on buying investment properties and things of that nature, but there's actually a ton that we have access to inside of the financial vehicles, and you're going to tell us about it.
Yes, well, I am happy to be here. Good morning, everyone that is joining. I hope that we do get to work together, and I hope to be a point of contact to you. Mike, thank you for setting this up with me and giving me another opportunity just for a fresh face to kind of, close the year out as we go into fall and winter. So what I'd like to do is just kind of jumpstart right into my presentation. Just a minute here. You know how this goes. Okay, so can everyone see my screen clearly? Just kind of in presentation mode.
Yes, I can.
Okay, thanks, Mike. Appreciate it. So what I want to talk about today, and my information is on the bottom right, is how to invest your commission dollars. And what we all know is that with the cost of inflation, that it is very important to try to keep our day-to-day dollars in our pocket. But also, where can you put this money where you can invest it conservatively, you are growing, and you have full access to this money that will never be taxed again? So a little bit about me. Again, my name is Lisa Ina. I'm an agent with New York Life. I am a part of a 65-year-old financial practice. So this practice that I'm partnered with has been a partner of New York Life's financial business for 65 years. Coming into the business, I've been working with different clients and just counseling them on how to invest their safe money in certain buckets. So I try to keep it as simple as possible because, again, it is case per case and every situation is different and unique. I like to educate individuals on their past, present, and future investment vehicles. So where have you started? Where are you today? And where do you plan on going? And I want to be able to address that. And if it's something that I think is perfect, I would not recommend breaking it or touching it. And how can we minimize taxes on a day-to-day income? So basically on these commission dollars, as you and I know, our commission dollars are taxed. And how do we avoid any further taxable events? So the agenda that I have today are really some three main focal points. One being is your deduction of business expenses. Who are you working with that are your perks? Are you working with Josh Halpern, who is your in-house legal counsel? He is someone that he can help encourage you to set up an LLC. It is very cost effective. And this way you can focus on your business expense deductions. And he can assist in how to structure that as well. And also Bobby Bodner with Bretify, the three of us work together. Who is doing your bookkeeping and making sure that everything is in order, especially when it comes to your accounting? Part two, I'd like to talk about retirement planning. What are the three buckets? And I keep talking about these buckets, right? And the infinite banking concept. I kind of want to shine a really bright light on those two things because I think they can influence you and where your commission dollars will go in the future. And the last but not least, really preserving and protection of your family and your wealth. Protecting your family and any outstanding debt that you may have, a potential mortgage, whether that be for you personally, your family, your friends, or even your clients, if that is something that you are interested in looking into. And also having term policies that are flexible, super cheap, and affordable if you don't see yourself in a position right now to focus on retirement planning. So I want to be very direct. When working with me, you'll know I am very direct. And I want to say what I know about working with realtors. What are the problems? The problems are we are all 1099. You and I, we are both 1099. So we have no access to traditional benefits like a 401k, a Roth IRA, or any permanent plans that are going to secure us from now until we are in our 60s and 70s. And taxes. We know that Uncle Sam is always going to be knocking on our door, and we are expecting these to increase, as we can see over time. So the main goal and the main question that I want us to focus on is how do we minimize these taxes from chewing into everything you are earning? How can we do that? What is the best way to do that? And also follow the rules of all tax regulations that we are subjected to as 1099 employees. So what are the solutions? So I want to dive right into the 3 buckets. And everyone's thinking, what are these 3 buckets that Lisa keeps talking about? It's going to drive me crazy. So let's just jump right into it. The 3 buckets are, you have your 1099 now, which is always going to be taxable. You have 1099 later, which is going to be tax deferred. You may not be paying taxes on it now, but you will be paying taxes on it later in a lump sum. So depending on what the funds are within this product or in this bucket, you will be subjected to a taxable event. And then tax-free never. As you can see, it's a green bucket. That's the money bucket. That's your safe bucket. So this is the main question. If I don't tell you anything more, I want you to ask yourself, where do you want most of your money? Now, if we can be honest, if I were to pick a volunteer today and say, where do you think most of your money is? Can you tell me? Just based on the information provided. So again, the main question is, where are your commission dollars going? So you can see here, your 1099 now, your taxable buckets are going to be your real estate investments, your business income, your savings or any CDs that you may be partaking in, and any investment accounts that you may have, whether that's through your employer, any side businesses that you have, and are you happy with those percentages? How can we move these pieces around and reallocate some of those funds? We're looking at 1099 later. This is a tax deferred bucket. So you're kind of yielding where your taxes are going and which direction you're able to move them. This is more of like your 401k, any IRAs that you have, whether it's a personal account or employer account, any annuities that you may be funding, whether that's in the future to have any future income, and other deferred compensation plans. You know, where is your money now, and how can we get it into this tax-free income bucket? So focusing on really the goal today is this green money magic bucket, which is 1099 never. This is a tax-free income bucket that you can dip into at any time. You have 4 main plans. You have your Roth accounts, which is a Roth IRA. It can be funded on your own through an investment account or with me. I'm happy to structure that for you as well. And you are in complete control of that account. You are able to fund it, you are able to have access to it, and you're able to control it and monitor how your funds are growing over time. A 529 plan. As many of you may know, a 529 plan is a college savings plan. It is more subjected to your children rather than a retirement account for yourself. And then municipal bonds. As we know, as investing, it's always good to buy low and sell high. But right now, municipal bonds are very tricky and risky. And then you have cash value life insurance. Now, some of you may be thinking, I don't need life insurance. I don't have children. I may or may not be married. Why should I invest in this product? So again, want to focus on 1099 never, and these are the 4 plans that I want to be talking about, kind of based on a timeline where you may be and where you want to be. So starting on the left-hand side of my timeline, you have a Roth IRA. Keeping it very simple, your maximum contributions are $6,000 a year. It is inheritable by your spouse and children. But again, it is limited based on your household or your individual income. If you do make a certain amount per year and you are consistently making that income for, I want to say, a minimum of 4 years, you do not qualify for this type of product. Now, again, you don't have full flexibility with this account. There are penalties and taxes on certain earnings, especially with state and local taxes. Any withdrawals before 59 are taxable and are penalized, and you are forced to take RMDs, which is considered a required minimum distribution at the age of 70. So you have a small window from when you're 59 and a half until you're 70 to withdraw this income for those 10 years. Municipal bonds. Again, these are an all-time high for interest rate risk. The interest rates paid on municipal bonds are lower than any corporate bond. Because of that, right now, bonds are at their all-time historic low. You know, again, going back to investing and being a stockbroker and being very stock savvy, you're risking your safe money. And I've noticed that with some of the clients that I have had the privilege to work with who have had these products for many, many, many years. And when COVID happened, they were teeing up to retire, investing in their timeshares, and they saw their muni bonds take a huge hit where they had to work for another 4 or 5 years to make up for that in hopes that they can turn it around. And again, knowing how municipal bonds work, you are investing in a debt. So that comes into buying low, selling high. You are hoping that you're going to make a profit when you're investing into something that has no value. There is debt there. Transitioning into cash value life insurance. Now, I did bold Roth IRAs and cash value life insurance plans because I think these two products can apply to you all as agents. This is something that we know cash value life insurance to be infinite banking concept. It is a concept that all wealthy investors, you name it, any money savvy individual will tell you the infinite banking concept is a safety net to have in your investment portfolio. Whether you do invest in a Roth IRA or any stocks and bonds, it's always good to have a safety net that you can fall back on so you really don't hit ground zero. There are tax advantages when having this product. You can protect your loved ones in the midst of supplementing your retirement income. All of these distributions are received and fully taxable on a tax-free basis. Knowing and guaranteeing that these products will never tax your dollars again, whether you are to spend them, to allow them to grow and not touch them, or access them for any reason, whether it's a family vacation or family emergencies. This is funded with after-tax dollars, so you are guaranteed to not see any federal or state taxes on your income limits. And there are no IRS penalties for using any cash value before 59 and a half or after age 70. You can retire at age 40 and supplement this income for your retirement and trigger it to give you a monthly income for the rest of your life. And there are no limitations. Whereas a Roth IRA, you are limited to $6,000 a year. If you make a certain amount, you are not eligible for this product. Diving into a 529 plan. Again, this is for a savings. This is a savings vehicle for children's education. However, there are certain drawbacks, whereas you do have to use this product for educational purposes. There are favorable state tax treatments for state residents, so you will be subjected to a small tax bracket on that. There is a shortfall in contribution. There will be nobody knocking on your door saying, hey, John Smith, you owe, you forgot to pay your $1,000 contribution last month. So you can have a shortfall in these contributions to grow wealth or any sort of savings plan for your children when you have this product. And again, there are earnings that are being taxed, and you will incur a 10% federal tax on that when it comes to accessing this money in the event that is not for college education. There is market risk. Depending on how the market fluctuates will determine your growth or loss within this product. So I want to dive a little bit into the infinite banking concept. Two main questions. What is infinite banking? Why is it important? And how does it work? What is infinite banking? It's a personal financing strategy that allows you to leverage a whole life policy as a personal bank. It includes taking out loans against the policy without any subjection to surrender charges or taxes. And there's growth on cash flow on a tax-free basis, of course, through the insurance dividends. Now, you have the ability to transfer this wealth across generations, whether that be to you, your children, your grandchildren, or even just a trust in the event something were to happen and your children are very young. You have the ability to benefit from lowering interest rates. How can I lower interest rates while having this product, right? And so with that being said, you are not subjected to the market. There is no risk of losing that growth. And you generate cash value as long as you keep this product in place. If you're paying your premiums, you are in good shape, which is your contribution. So how does this work? Again, if you're paying your premiums or your monthly contribution, it can be an annual contribution, however you feel is appropriate for your day-to-day lifestyle, you will have continuous growth, and it will be shown and projected within the policy. In participating in a whole life policy, the policy pays a dividend, which allows any contribution that you are paying to go towards the cash value and a portion to go towards the life insurance product. Because again, the IRS wants to see that we are paying for a life insurance product to have these tax advantages on the other side. And continuing to accumulate interest on the entire cash value, even if you borrow against it. So you're probably wondering, what does that mean? If I'm going to take out a personal loan, how am I still growing at a dividend scale as if I never took out that loan? New York Life is the only company to believe in something called non-direct recognition, which is NDR. For the sake of the example, if there's $10,000 within your policy and you want to take your kids on a vacation somewhere, you want to take them to Disneyland or wherever it may be, and the projection is going to be $5,000. You can withdraw $5,000 from your account. You'll have $5,000 left over, and your policy will still accrue, yielding at a dividend scale of 6%, as if on $10,000, as if you never withdrew that loan. So that is something called a non-direct recognition. We are not going to recognize that you took out a loan, and we can only give you the growth on the remaining balance of your cash value. And again, this goes back to the company. What is the company that you're working with? What differentiates New York Life from the other sister companies that we may have or our competitors? And same applies to you as agents. What differentiates you as a Keller Williams agent that you take pride in versus Howard Hanna or any other broker that might be out there? And that's something that New York Life, we wear that badge with honor, is our non-direct recognition. When somebody wants to take out a loan, it is yours. This is not something we should penalize you for. So now, putting a picture to all this, the chatter that I am saying, you are the policy owner right over here. As a policy holder, we're going into step one. You are paying your premiums. Now, a premium is considered your monthly or annual quarterly contribution. With that being said, you automatically participate into this whole life insurance product, which is the infinite banking concept. You have two main driving factors while you're alive with this product. One being the cash value bucket, and the next bucket being your insurance coverage. Now, focusing on the insurance coverage, a portion of your premium goes towards the insurance coverage. And then again, your insurance coverage is growing without having to make any more contributions. So you'll see you have a single dollar sign here, and you're growing at about $2 more dollar signs in growth without having to contribute any more of your liquid dollars, your pocket dollars. With that being said, you are protecting your loved ones. In the event something happens, there is a claim benefit that is designated to your beneficiaries and is received on a tax-free basis. Transitioning over to bucket number one, right? The cash value bucket. That's where we see our commission dollars going. There is $1 sign here, and it is growing at a $2 sign basis. So it's almost a 2-for-1 ratio. You are growing and continuing to grow these cash dollars on a tax-free basis. which will then be received to you as a policy owner, fully accessible in the midst of receiving dividends from our company, and it's being returned back to you as a policy holder. So I'm sure you're wondering, Lisa, you keep talking all these things. We don't know what these are. We're going to write them down. We're going to see if this is legit. What is a dividend? Why is a dividend important, and how does that apply to me? So a dividend, essentially, New York Life is a mutual company. We are not a stock company. So any surplus that we make as a company, our distribution of profits as a corporation is then distributed to our shareholders or our policy holders, which would be you as the individual. When the corporation earns a profit or a surplus, a portion of that profit is paid as a dividend back to you. So a portion of your premium is invested into the company and then reimbursed back to you as the client. And also a portion of that is then being allocated into your death benefit. So you're seeing that there are those two driving buckets. If I go back here, these two driving buckets, how are they growing? And it is because of the dividend that's being contributed into the policy. Again, a portion goes towards the cash value, while a smaller portion is going towards the insurance to continue to increase those two driving factors. Now, what is a mutual company, and why does that make New York Life special? Why should I choose to work with you, Lisa, and not somebody else? Because a mutual company, again, the policy owner, you as an individual, you own your policies. Without you, we wouldn't be a company. So you essentially you own our company as New York Life. I work for you and we work together. And every policyholder benefits from the divisible surplus generated. Every single policy owner, and that is the dividend. So that's what makes New York Life a very special company, because whatever product you do have with us at the right time and the right product for you, that you are growing at a dividend scale that is always going to ensure that you are making a profit. Now, before I transition, I really love this quote, because this is what encouraged me to get right on the right path to plan for my retirement and not just focus on a Fidelity representative, somebody that I call on a 1-800 number and I have to go through, I'm teleprompted to get to somebody to speak to. It is the way to get started is to quit talking and begin doing, by Walt Disney. That always stood out to me, and I did the research and I decided for myself that I would represent New York Life and anybody who is in need of my assistance. So now transitioning into something like term insurance, I want to talk about something that is very affordable and can tee you up if you don't see yourself applying or wanting to participate in the infinite banking concept. You may not be there right now. You may need to have your liquidity in your pocket for day-to-day expenses, and that is okay. There is a way to tee you off to have that long term. So what is term insurance and why is it important? Term insurance, again, you have access to living benefits and enrolling into this type of product. It grants you early access to your insurance benefit to help with expenses in the event you do become ill or disabled. It offers tools and flexibility that you need to prepare for many of life's opportunities and challenges. Again, we didn't think something like this would happen, and now there's COVID happened, monkeypox, chickenpox, avocado pox, all different kind of pox coming our way. It's like never ending, but we still have to move mountains. Life must go on. The show must go on, as myself as an agent and for you to make a living to sustain our family's needs and our individual needs. It's very budget friendly. It's something that is not considered as big of an investment, but it will allow you to get on the right path to where you want to be at the right time. And again, it's continuing coverage if you become disabled. I think that's the most important thing, because we don't know what can happen tomorrow. If, God forbid, you become disabled, because of the company that New York Life is, we will pay those premiums for you. So this is you're basically insuring your insurance policy. If you become disabled and you are unable to work and perform normal activities, New York Life will pay that premium for you to ensure you and your family are protected. And I think that is very important to know. the value of having a term insurance policy versus any other product, that, you know, you're building financial readiness for tomorrow and the future. And I can't stress that enough, because we've all experienced loss. We've all experienced what it means to have, you know, lose that sense of income. And flexibility to convert to whole life or potentially a hybrid policy. You can have a blend of a little bit of everything in different buckets. So I always believe that it's not the best way to always put your eggs in one basket. And that's the most popular saying. With having a term policy, there are no medical exams that you are subjected to when transitioning into a whole life product, or when you're ready to invest in an infinite banking product. And there are level premiums for the duration of your policy. So whatever contributions you are making, they are not subject to change until you decide that you are ready to make that change. It's life insurance that fits your life. What mortgages do you have? What debt do you have? What do we need to protect? So I want you to ask yourself, do you currently have any coverage? Have you thought about that? What would happen to your children, grandchildren, nieces, nephews, your friends or family, the loved ones that you have in your life, if something were to happen to you? So again, I want to focus on preserving and protecting. What am I preserving and why? And what am I protecting with this product? In retrospect to everything that I've already discussed. Term insurance allows you to preserve your health long-term. So if we were to enroll into a policy today, and God forbid something were to happen 4 or 5 years from now, you find out there is cancer, you find out there is some health issues, you are still covered and locked in as when you applied today, when you were young and healthy. And that is something that we believe in. You should not be held against. If something does happen within our health, we can't control that. You secure a promising future. And I think that's what's most important, because we don't know what is to follow as we grow in our careers. You have financial security and lifestyle. It's something that is out of mind and out of body. It's kind of to the side. It's something that you don't have to worry about. You have the protection, you've locked it in, you should be good to go. And there's income replacement. If something were to happen to you, are you the breadwinner? Are you someone that someone else does rely on for that income? Again, it is a lower cost for a larger amount of coverage. There are no savings vehicles involved, but it allows you to have that accessibility in the future. And there's enhanced protection. That's what really matters. With something like this, you can protect a mortgage, college tuition, anything that were to happen to you later on for a more budget-friendly approach. And you're probably thinking, what am I protecting? You are protecting asset growth potential, tax advantages, opportunities for dividends that may have cash growth in the future and allow you to grow faster when you are ready to contribute to a whole life policy. You have convertibility and flexibility options. Your income and benefits and assets and other resources accumulated over time. So your health insurance, your income, your mortgages, any benefits that you contribute to, or your assets within a household are protected long-term. Mortgage protection, as I've stated, and college funding protection. In the event you were to put away, a $500,000 policy, that could protect the child's, $250,000 college tuition with dorming. We all know how expensive that can be. So my main question to you is, how much income would our family need to maintain their financial security? And I kind of want you to ask yourself, do you see yourself in more of a term product or more of a whole life product? Maybe a blend of both. Maybe, having the plan and a timeline will save you a tremendous amount of time and stress. So utilize your perk, utilize the people that are there for you. You have me as your financial advisor. You have Bobby Bodner as your accountant and your bookkeeper with Bretify. You have Josh Halper, who's your in-house legal counsel with legal help. We are here to assist you. These are the 3 people that are working with you that you can contact directly via email, via phone call, text message, you name it. We can meet with you, set up a time with you, and move forward and assisting you and giving you the right, really an educational approach and sharing the right information with you so that when you're ready to take that step, we are the people for you to turn to. So just to summarize everything I have discussed today, starting now will save you time, money, and worry in the future. It may not be something that you sign up for today, and that is okay. As long as you understand the steps to get to where you want to be, that's all that we can ask for. Utilize your perks, utilize the people that are there to help you, like Mike Rapaski, all of the people that you can turn to for advice, including myself, Bobby Bodner, and Josh Halpern. Schedule a free consultation with me. Let's see what you have. Let's review what you have. Take the advice and think about it. Review it with your family, your friends, your spouses, your parents, whoever it is, and obtain a second opinion. That's what I think is most important, is a second set of eyes. I want to be like your financial doctor. If you go see one doctor, you tell him my back hurts, he might not prescribe you medication right away. He might say, let's get you through physical therapy first and see how you feel, and take baby steps with you. And essentially, I want you to learn how these options can apply to you and your loved ones. I think it's important to obtain the information, do the research, ask questions, challenge the people that you're working with to really feel comfortable and build a trusted relationship with them. I like to see myself in a relationship business rather than a transactional business, which is why I've been part of a 65-year-old practice for the last 5 years. I want to thank you all for this opportunity. I do want to open this channel here for any questions that you may have. My information is listed below. If you're not able to get this information, I'm happy to send you this presentation to Mike Rapaski or to Carrie and find a way to be able to circle this back to you for the information if necessary. Thank you so much. Do we have any questions? No? All right. Well, thank you so much. I appreciate your time. Feel free to connect with me at any time.